Nigeria's foreign trade for the first quarter of 2024, surplus of 6.5 trillion naira, which is, of course, a big recovery from the 1.4 trillion naira deficit recorded in the previous quarter 4 of 2023. It was 927 billion in the same period a year ago, quarter 1 of 2023. Now, the trade surplus recorded for Q1 2024 is a record high, according to data dating back to 2009. The closest was 5.7 trillion recorded in Q4 2011, according to available data. Now, the report, of course, was published by the Bureau of Statistics, highlights what's being called an impressive economic performance driven by substantial increase in exports. The data is also fueled by the exchange rate depreciation as well. When converted, the naira, of course, would be higher than any other period in history. Now, we're going to speak with Muktar Mohammed, who's the CEO of Finance with Muktar, for more on this. Muktar, we usually talk stocks when we have you on the show. You're very welcome, sir. Good evening.
Thank you.
To you. So, the numbers that you've seen from this trade figures, well, what's your takeaway from them?
Well, nothing so surprising or nothing so exciting.
Yeah.
Like you said, your reports date back 2009. What was the exchange rate that time? What's the exchange rate?
Today.
You hit it all well there with the introduction. Those values largely driven, in terms of values largely driven by exchange rate devaluation.
Yeah.
And again, if you use data when you summarize it, you realize our imports also went up about 39.3%, and also our, in terms of value of import, went up by 95.5%. So that is a pointer to where the current inflationary pressure is coming from. So not really something to really celebrate. When you look at it, what are the key drivers of this? It's the oil and gas.
Crude oil.
Crude oil. What do you see in crude oil? Normal crude oil export. The year we are driving that by almost 80%. Our own Dangote refinery is struggling for us to meet up the demand in terms of crude. So definitely, I don't think it's something the government will celebrate it. It's trade surplus. But when you look at those indices, you realize oil and gas 80-something%. You look at other sector, agriculture, in terms of value, about 1-something trillion. So when we look at oil, you see about 15 trillion. So the gap is one. So we are still an oil-driven economy. No matter how much we pay lip service to diversification, this data just says it all.
As far as the PMI, Purchasing Managers Index, which it's been in expansionary territory, if you want to call it that. Is there anything to draw from that, tying it to the Q1 trade numbers?
Nothing really. Like I said, most of all these things are just driven by exchange rate, devaluation, trade surplus. In terms of crude oil, remember that we now have, in terms of volume crude oil production have gone up.
Yeah.
So when you compare that to where we were last year, where we were doing not up to one and less, now we are doing about 1.7 million barrels per day. There was a time that we're just doing about 800,000 barrels per day. So if you really want to see what trade surplus has done, then we should be seeing that impact in terms of earnings that comes in terms of FX earning that will really help our currency stabilize. We are not seeing that. We would have seen that in terms of, with that mean it's showing that we imported less products into the economy. But when you look at the import sector, realize that our largest import partner is China, and so most of those goods are goods that kickstart even what we produce here in Nigeria. So then you see where the cost of living has really gone up. So nothing really. I'm not too so excited about it.
The Afro-Exim Bank put out a report saying that Nigeria is going to fall from first to fourth position. Based on, I guess, the exchange rate, if you take nominal real GDP and so on. But I mean, we had Chapel Hill Denham on the show here about a year ago when the devaluation happened, and they already said Nigeria was going to lose their first place. So that's all currency related, right? How do you view the falling from first to fourth?
When we're first, what economy has really done to the real economy?
Right.
So we're going to fourth, like you say, currency devaluation. And maybe that is why Nigeria is thinking of rebasing. You remember there's then I say we have to rebase. We really want to rebase to get back to our #1 position, because we are seeing that some part of strategic industries that are not contributing to the GDP were not captured. So we've seen all this really happen in terms of GDP and that. But like I tell people, GDP is GDP, but the real economy is what really takes. How much job have we been able to create with the kind of GDP that we have? How much foreign import have we, foreign company have we attracted? Just of recent, we were complaining that Microsoft said, oh, they're suspending their data. They said no. Nigerian government said no, they're just trying. Before we know, they say they are now in Kenya. So it shows that there's a lot of problem down here. You just have to look at the currency devaluation. That's why you see that the major companies are actually leaving Nigeria because of credits is high. They don't have those credits. Again, what grows an economy is the credit. So it's not coming. So I'm not too surprised about what is happening, whether we fall to 4th or to 5th. I think as it stands now, we've taken 2 very critical policy decisions that have really brought our economy to its heel. Removal of subsidy, devaluation of the currency, and we have not found a solution to the bleeding in terms of our currency devaluation.
Well, the stock market is off 33%. Is it disconnected from the wider economy?
You know, Lotus, I always say this thing. I said the stock market has a life of its own. But come a time it takes the life of the economy. You know, it's like, it's sometimes, let's say, it's like a child when he's inside the womb of his mom. His mom feed him and feed him and feed, so he has a life through the mom. But when he comes out, he will need to begin to depend on some other variables outside. So the stock market has a life of its own now, which is normally driven by those companies are making the numbers. And sometimes all these numbers are, if you look at the sector that are really driving the stock market, is the financial sector. And you know, again, we go back to that devaluation. It seems to make their numbers look a little bit fantastic. So what happens in the market today that you're seeing those good numbers coming out from the market was just a singular decision that hit the market on Friday even after the close of market, where Access Bank came up with the right issue of about 19 naira 75 kobo and was selling about, at the close of market on Friday, was selling at 17 naira 20 kobo. So a lot of investors wanted to key into it today to make sure that, okay, most especially those investors, that's a right issue for those investors that also entered today. They are looking at the right at 19. So they were thinking, okay, can we get this in at 17.20 again? So we have a kill about 2 naira 50 kobo. So a lot of them kill, and a lot of people were not selling. Then you saw that upside in asset. And you know, it has a way of snowball effect. So when a tier 1 bank does something, you're expecting the next tier 2 bank, the next tier 1 bank to do it. So that's why you see that up movement also in Zenith Bank. You saw that also in Fidelity Bank. You also saw that also in UBA. So most of the people that are key to get into some of these stocks, like wanted access and couldn't get it, were now beginning to look for alternative because they feel that same might just happen to these other stocks tomorrow. So the stock market is you see, when you look at the stock market, is it really the largest barometer to measure the Nigerian economy? When you look at those companies that are listed outside the financial sector, where you have the giants listed, when you look at others, corporate sector, the conglomerate in this country, you realize some of them are not listed. Even the telecom sector, you only have Airtel Africa and you have MTN. Then when you look at the oil and gas, what you have there, you have marketing arm. Only Seplat seems to be the one that all is. So I think when we begin to measure the barometers, when we have those top 5 key drivers of Nigerian economy listed in the exchange, then their performance via the economic will begin to tell us the true nature of the Nigerian economy.
Excellent point there. Do you, as far as where the economy is right now, well, we want more IPOs, we want more companies to list on the exchange. Would the economy have to improve with where we are right now before, because you were talking about companies leaving Nigeria earlier, if we want to see a market that really reflects the wider economy, those companies that have to list, are they going to take a wait and see approach to say, okay, let's see how things are right now before we consider listing in it?
No, I don't think so. Look, sometimes they see opportunities. Like the banking sector, the recapitalization of the banking sector is largely driven because they are looking at high ticketing deals with $1 trillion and $1 trillion naira economy. I mean, $1 trillion economy. Then again, stabilizing of the exchange rate. You just see, just what I just give you the analogy of Access Bank. What you see more play out is that most of the effects that will really stabilize this market will have to come from most of these IPOs and most of these right issues that we are going to see, because a lot of Nigerians will not have the opportunity to take this right. So when you see those policy of the CBN, he attempts to make the rich more richer, because most of the right will be taken over by the rich. Retail investors will definitely lose out, because a retail investor that just have, let me say, has Access Bank of about 1 million units of Access Bank. He is now giving a right issue about 50%. And at 19 naira 75 kobo, that's 500,000 times 19 naira 75. How many retail investors can afford it? So you begin to see that you are creating more wealth for the already rich. They are going to acquire the banking, most of these banking stocks again. And I tell retail investors that reach out to me, what do we do? I say, well, it just shows that you are now amongst those billionaires, so you just sit down there and enjoy the leverage the billionaires enjoy, because they won't be selling at any time soon. So you just enjoy the capital appreciation and the dividend payment. So that is what most of this IPO will do. Now, one of the biggest IPO that will happen, I'm sure, is going to be the listing of Dangote Refinery. If it happens, then that is a key driver of the Nigerian economy. We saw that when MTN came to the market. We saw what that did in the telecom sector, because it's one of Nigeria's largest telecom companies. So we'll continue to see those companies, those big companies. The Nestle's are still there. The Unilevers are still there. But it's just that in terms of performance, they are not. The Boa Cements are still there in the conglomerate sector. Dangote Sugar is still there. Dangote Cement is still there. But you need to see more players in the market, especially the service sector, the fintech companies. That seems to be, if you look at the last report by Nigerian Bureau of Statistics in terms of addition to the GDP, you realize that it was the service sector that drives the positivity we saw in the GDP. But how many of these service sectors are really listed in the market? And how many of them really want to be listed in the market? Because again, if I want to be listed in the market, I would need to be encouraged. You know that some of the companies that we thought would be listed, I've been trying to delist several of the companies. So there's so much happening in the Nigerian economy now, because we seem to be doing a lot of try and error. Does it work? Today, Bureau change, tomorrow, suspension, revocation. We're not following global best practice. Like I told somebody, Heritage Bank.
The revocation of the license.
Silicon Valley.
In the
UK,
US.
the US. What happened? The same scenario. Not necessarily the same scenario. That one was even more, because they looked at Silicon Valley. Because the new normal in terms of banking and finance globally is to save depositors' funds. So what you do, you change the management team, put up those, they have assets, and some of these banks went bad because of insider dealings. So you go after them, get their money, then sometimes you sell these banks to real investors. That's why AMCOM is there. AMCOM we've not said no more AMCOM. So why didn't we sell it to them, then keep, and then be able to save job in an economy that is struggling to create job? You are not sending more people into the job market. So what is done globally is that you make sure you save the deposit fund, you change the management, bring in a new team, buy up those banks, and see how you can inject funds. That's what happened in Silicon Valley. It was even so bad that the Silicon Valley in the UK was bought by the UK government for £1. That is just make sure that depositors' funds but again, there's a new sheriff in town. Maybe he's saying, look, I'm not here to protect anybody. If you go up the road, you go.
On the fixed income and money market side, you've seen with the interest rates rising on the CBN side, inflation keeps climbing. Is that going to be a headwind for the stock markets going down the line? Because you
see, the beauty about the stock market now is that most of those companies that investors really want to, they're still undervalued in terms of value. They're still undervalued. Now, when you look at the return, you said it about year to year, about 33 or so, 33%. You can't get that in the fixed income space at the moment, even with the hike in rates. So you are not getting it, because again, most of the fixed income, most of the companies that want to even come in to grow trade and commercial papers and all that, they are looking for cheap fund because of the high rate in terms of getting in the banking sector. And they are not going to give you the space that you have in the banking sector. So they want to look for a cheaper rate. And so that is why you see the fixed income space between 16-17%. That does not beat inflation. So what you have seen playing out in the fixed income is those players that made so much in the stock market, trying to diversify into the fixed income to look for good entry point back into the stock market. So that's what is playing out. So a lot of investors that are leaving the stock market for the fixed income space are even going there saying, okay, by the time we see what is the right pricing of this bank in terms of their right issues, they want to be able to even key into some of those right issues. That's why they are even moving from the fixed income space, from the stock market. So it's still a lot of investors. I always tell people, this fixed income space is for preservation of wealth.
Okay.
While the stock market is for the making of money. Yeah. So once you make the money in the stock market, you're looking for where to preserve it in terms of the gain that you're making. You go to the fixed income space. So fixed income, preserve your wealth. Stock market, make the money. So it depends on your age living and your if you are in your 60s or 70s, you don't want to be doing the stock market always. You just want to preserve those wealth. So when you make little of that, you go to the fixed income space.
Yeah, fantastic. So look, there's all this talk of minimum wage now. That's the overhanging, conversation in Nigeria now, how the average Nigerian can survive. Is there pockets? Are there opportunities to still be able to, if somebody is doing a half year look now, say, Muktar, help me out. This is June now. I'm looking towards the end of the year, or maybe to 2025 to build something. Do they start small with equities or start with fixed income? What does a healthy portfolio that you want to build from scratch look like?
A healthy portfolio should be mixed.
Mixed.
At the moment, it should be mixed. Depends on your, like I say, your age level, your risk level. You need to look at it. It needs to be mixed. If I'm a civil servant, I'll try to play both mixed, because just to make sure you preserve, like I say, preserve some of those wealth, that money that you've got in there. You think of taking risks in the stock market. Yeah. So for me, I think if there's no better time to be in the stock market really
than now.
Than now. If you look at what we are going to see play out is what happened in 2003, when the banking recapitalization came to play.
Right.
At that time, I remember Access Bank sold for 10 naira each cover.
Oh, wow.
Those were the first time they were doing their initial public offer.
Yeah.
So that's what we're going to see. And how that play out at the end of the day brought in a lot of banks back to those big capital. At that time, it was 25 billion. And it was huge when you look at that time. And so that's what is going to play out now. And we mustn't forget that it's not lack of liquidity from this bank. Is because the CBN decided that we don't want you to use your retail earnings, because the retail earnings of this bank are even more than the 500 million that the CBN is telling, 500 billion that the CBN is telling them to bring in. Yeah. If they were allowed to use their retail earnings, some of the banks have retail earnings in the trillions, especially the tier 1 banks. So what it means is that when you are keen into this bank, you already have a retail earning that can pay a good dividend of a range between 8 to 9% and capital appreciation. So it depends on which device that you are, because when you look at the fixed income market, it's fixed. You get what you have to get there fixed. But you look at the stock market, you will not only be thinking of dividends, or you also be keen into capital appreciation. So it depends on what you really want to do. But if I am you, at the point like this is an opportunity time. Look at 70-30, fixed income 30, 70% the stock market. And when you talk about the stock market, then you look at those tier 1 banks. Just look at about 20% of those equity. You look at the tier 1 banks, then you come to look at Dangote, Sugar, or NASCOM, especially, they are still in that process of merging together. That will also help in terms of price. And then also you look at, like you say, Flour Mill, even MTN, some of these companies are really going to come out of the wood. Yeah. Remember that when they publish their result, when you see those huge losses from those companies, the exchange rate was about 1,900, 1,600.
Right.
In spite of what we are getting now, we have an exchange rate about 1,400. Yep. So you could see a gradual recovery. And when you look at those results, even with Nigerian breweries, those results are not bad. They are still making profit. But what really affected them is the exchange rate volatility. So there's still a lot of companies that are value, so that has more value. So now, if you're an investor, you begin to look at value investment. Does it create value? What is your ORK? I'll tell you, what is your objective and your key results? Yeah. What do you really want to achieve? That is what will drive investors at times like this, especially when you have an economy that has not really come up with a clear-cut strategy on how we move this economy forward.
Muktar, it's always a pleasure talking to you about the Nigerian economy and getting your advice on investment. CEO of Finance with Muktar, thank you so much for your time. Really appreciate it.
My pleasure.